Hey guys and gals, it's Logan and
Alex Olson.
with Clemens Real Estate coming to you live on another episode of the Multifamily Minute. We did not have an episode last week because I was at Big Cedar Lodge and man, that place is beautiful. But Alex did not want to do an episode solo, so you get to see us this week though. So we're happy to be here. Happy to talk to you a little bit about some really cool developments in Kansas City, some new projects, but also want to kind of give you our thoughts on the macroeconomic trends that we are seeing. So, Alex, we're going to jump right into that. So, September rent payments reached 76%, reported by the National Multifamily Housing Council. More than 76% of the U.S. rental households have made rent payments as of September 6th. And that report comes after an additional $600 a week unemployment benefits expired and about a week after the Trump administration announced a nationwide eviction moratorium through the end of the year. According to the study, 76.4% of rental households still made full or partial rent payments between September 1st to September 6th. And that's a 4.8 percentage decrease between the same period last year and only a 2.9% decrease from the same period last month. So definitely something that we're keeping our eye on, but rents are still definitely coming in. What I really want to talk about is why investors love the heartland and Kansas City in general, and more specific, Kansas City other than other states here in the heartland. In commercial real estate investing, what sets the great investors apart from the run-of-the-mill investors is the ability to anticipate where the puck is going. And the late great, I don't know if he's done. Maybe not late, but he's a late from an athletic performance standpoint, Wayne Gretzky. He was not the fastest guy, but he always seemed to be where the puck was going. So he would say, I don't skate where, the puck is. I'm skating to where the puck is going, not where it has been. So right now, everything is trending towards the heartland as where the action will be very soon. And there's a mass migration occurring right now away from the coast towards the heartland. And it's not just happening on one front. So it's occurring on multiple fronts. A migration not only of workers, but of companies, talent, and investment capital as well. And Alex, talk to us a little bit about that, because you texted me and said, man, Kansas City is getting hot. There's going to be a lot of dollars coming in here. And you said it was going to be like a different market here pretty soon. And I can't remember what market you mentioned that it was going to be like, but talk to us a little bit about that migration of investment capital, companies, and workers.
Yeah, what we're seeing is we're seeing tons of money coming in. 1031 exchange people coming into town. They might sell a $500,000, $1 million condo in San Francisco and like the returns that the Kansas City market gets it. But then we also have people from maybe places you wouldn't expect, such as Omaha even. Mm-hmm. We've got people coming in from Denver. This is Kansas City. If you ask around to different agents, you ask around to different investors, you attend conferences that people are talking that are outside of Kansas City, you will often hear them say Kansas City feels like Denver 20 years ago. If you look at all the things that Denver has gone on in Denver, of course, that train was a long time coming from Denver. But, with all the growth that's going on and the investment dollars that are being put into it, really it looks like it's really just in our urban core, but it's in our urban core with the streetcar extension, that being a huge catalyst for downtown. It's going to be the same catalyst, maybe even better for the rest of the city as it comes from downtown through the Country Club Plaza. So all that is going to expand economically with apartment complexes, entertainment, all that kind of stuff. And so that's what people are looking at. They see that, and that translates into, holy cow, Kansas City has a lot going on. I want to be part of the metro. How can I be part of the metro? Maybe I can't afford downtown, but I can afford a Lee Summit or an Independence or, up north of the river or Grandview, wherever the case may be, because the jobs are here.
Yep.
The jobs are recession resistant. They're not just a tech bubble. It's not just any kind of bubble. It's diversified across your healthcare, transportation, warehousing. Industrial is very big. We've got a lot of land here that we can use for almost anything from storage to solar to data mining. All that kind of stuff can be located in Kansas City. And guess what? It's a 3-hour flight to anywhere maximum.
Yep.
In the U.S. So it's just becoming a popular spot, because the bottom line here, though, is that it's still affordable. So right now it's still affordable, but I can't say it's going to be that way for, much longer. I don't know what the runway is on that.
Sure. Well, none of us have that crystal ball, but let's break it down on what is actually, occurring when we talk about this migration. And everybody saw the big $50 million funding for the streetcar. What they didn't see is the little $15 million that we got for the Berkeley Riverfront as well. So both ends of the streetcar got their funding. So that's crucial to note. Let's talk about the worker migration. Since the beginning of the COVID-19 pandemic in March, many city dwellers who saw their incomes pinched due to the pandemic started looking for more affordable housing in less crowded locales with lower cost of living. And so many workers whose jobs were converted to work from home positions were no longer defined geographically and saw no need to stay in high rent New York City, Los Angeles, and other coastal towns when they could live in the same space in the heartland for the third of the cost. So that mass migration has had real effects on commercial real estate values and prices. And that's what Alex is talking about when we said we don't know how much runway we have here. According to Zumper, a San Francisco-based rental listing website, San Francisco asking rent dropped 3.3% from March to July. And New York asking rent dropped 2.8%. So, what happened in Kansas City? We saw a 3.5% increase in rent growth. That's right. The second piece was the tech migration. Although U.S. tech companies have long outsourced work or set up satellite locations overseas to save money, an emerging trend has been to move operations to lower cost areas of the United States instead of overseas. And so the New York Times just identified the Midwest as a hotspot for tech outsourcing. So venture capital is also following tech from what we call Silicon Valley to the Silicon Prairie, here in the Midwest. And so Kansas City's been doing a great job with Google Fiber, with the Startup Village, with all of the different programs here to help those tech startups. And we're seeing that happen with Backlot. What did they just get? A $425 million buyout? We're seeing it with iVerify. We're seeing it with the other guys down in the WeWork Lightwell space. I can't remember their companies, but they just started their Canada operations. I mean, these companies are coming here to Kansas City, and they're popping up and growing. So not only did we see, the worker migration, we're seeing tech migration, we're also seeing investor migration. And this is really important because this is what's going to create pressure on prices here in Kansas City. So if you're tired of diminishing cap rates on the coast, from institutional and foreign investors, the investors are starting to flock to the Midwest. I mean, we saw on Kansas City's Country Club Plaza below a 4% cap rate this year. That's crazy. And so, anyways, we're still seeing cap rates though on 100 to 150 basis points higher here in the Midwest. And that's attracting investors from California, from New York City. So according to research by CoStar Group, love CoStar, love everything that they do. Of all the multi-tenant pads in the Midwest sold at below a 7% cap rate recently, approximately 65% of those properties were sold to a California-based buyer. So similar metrics can be seen across single-tenant assets as well. So the future belongs to those who anticipate these trends and capitalize on them, and the future belongs to the investors who see these trends all pointing towards the heartland as a place to invest now. So now is the time to invest when the upside potential is still substantial, not when the market peaks after the secret gets out. And Alex and I are not here to tell that the secret's getting out. We're going to help you capitalize on that opportunity. It's time to get in on the ground floor. Now is the time to invest in the heartland. And on that front, Alex is bringing another property to you guys today. We've got one or two that we want to kind of highlight, but we still have some great projects. Alex, talk to us about, the text that you sent me recently was hey man, I'm really starting to get some traction with these property owners. So talk to us about how that's going. What are the conversations like with these sellers? And, talk to us about a few of these opportunities we've got to showcase this week.
I think sellers are starting to come out of the haze of COVID. Most sellers were kind of holding back on, hey, I don't want to sell. But as you build a relationship with these people and you start to understand really where they're at in their lives, and as we continue to build trust with them, I think they understand that we have kind of a pretty easy process for the seller to get through if we bring a buyer. And so now we've got some traction. And one of the deals I wanted to highlight is, it's a smaller deal, but it's a great deal because it's 6 units in a I would call it a Class A sub-market of Kansas City in Lee Summit. And it's also got 2 storage units that are on site that are not rented out by the tenants. So that's a cool deal where you get a little bit of diversification with really no risk involved in that. It's a standard 6-plex building. Yeah. Downtown Lee Summit. Lee Summit has grown from about a population of 50,000 people at 1990, and now then I'd bet it's probably close to 100,000. And they're investing $50 million. So remember, we got $50 million that the streetcar got to do some of their construction. Well, Lee Summit is building a $50 million investment in their downtown. It's going to look like something almost like you'd see in downtown Kansas City, or definitely downtown Overland Park. So this is about 4 or 5 blocks away from that. And so this is an excellent opportunity to buy something. It's reasonably priced too. So that's one deal that you need to scope out that'll be featured on our deal flow. The next property is, and we can talk about a couple ones. One of them, which I think is still interesting, and that's Maple Flats. You guys have seen this come and go in and under contract. We knew, or at least my opinion was, it was pretty overpriced to start. And now we're at a time where the prices come down. So take a look at that deal, because you're going to get 72 units for around $5 million. So for Kansas City right now, that's a pretty good deal, and it's in a location that's right next to a university. That they're putting tons of money into this area, the historic Northeast, which is a market I think that I like a lot, has a lot of character, and is exploding. It's kind of the new crossroads, so to speak.
We call it the Northeast Crossroads.
That's right, the Northeast Crossroads. It's hot.
It is hot, man. I love it up there. Those are 2 great deals, man. I really like the Lee Summit project. I think it's a unique one. It's a great little asset for somebody to pick up. One thing I wanted to note here, everybody's searching for that off-market deal, right? Direct to seller. And let me tell you here first that when you work with guys like Alex and I, that's exactly what we're bringing you. Sure, we're going to take stock of everything that's listed, but if you want the direct-to-seller assets, Alex is building those relationships with those folks on a regular basis. It's so hard for somebody that's not here to be able to drive a property, give them some feedback, shake their hand, or give them a fist pump right now because it's COVID, elbow, whatever it is. That is still an off-market deal. So the elusive off-market deal really is coming through. It has come through brokers like ourselves for a long time. So just make sure to remember that that's our job, is to bring you those opportunities on a regular basis. Alex, really appreciate it, man. Anything that you have for closing thoughts here?
The only closing thought I have is Q4 is, 15 days away. And, how are you going to end 2020? Are you going to rest on your pandemic mindset, or are you going to use Q4 to jump into 2021, into a new year and a new lifestyle?
Absolutely, man. I love that mindset. It's time to finish strong. The time is now to get into the heartland, and specifically Kansas City. So thank you for tuning in to another episode of the Kansas City Multifamily Minute, where Alex Olson is busting his tail on a regular basis to bring you off-market properties, and I'm just here highlighting them. I'm here letting Alex talk about the deals because he is working his tail off for you guys. We've got some great projects. They're going under contract. We're starting to see that momentum really start to build. So tune in. If you want to reach out to Alex and I, the best way to do that is to simply go to our BRSS system, the Buyer's Representation Success System. Fill out the buyer intakes form. We will get an email from that. Then you will get a Calendly link to speak to us directly. Alex, thanks again for your time, man.
Thank you.